Hey guys, Ken McElroy here, and I'm super excited to have my good friend Keith Weinhold here. Keith?
Hey, it's great to be here in Scottsdale. It's great to see someone in 3D rather than 2D since most everything's remote these days.
I know. It's been, and we are social distancing here, but Keith's from Alaska, and he's in town checking out Scottsdale, and I'm like, come on into town. He is an educator. He's got a great venue called Get Rich Education. He's got podcasts, he's got videos, he's got all kinds of great content. So you want to tell him a little bit about it?
Yeah, sure enough. So at Get Rich Education, it's certainly not get rich quick. It's about using an abundant paradigm, starting with thinking differently for an outcome in real estate investing. Thinking differently, it starts with not just getting your money to work for you. That's not the best and highest use of your investing dollar. It's getting other people's money to ethically work for you in real estate. In the short, that's why real estate investors get ahead, leveraging other people's money.
That's right. So as you guys can imagine, like a bunch of us are studying all the time, and we're looking at different things. We read different books, we watch different podcasts. And so when Keith reached out and he said, hey, well, first he said, do you want to go run Camelback for a fourplex, I think it was. And I'm like, no, because he's in incredible shape. But what I said was, what are you working on? What are you reading? What are you watching? And that turned into a conversation about this, shadow supply and shadow demand, which a lot of people aren't really discussing. And, you know, because what people are seeing right now are the numbers. So the numbers come out and you read them and you say, okay, this is the unemployment, or this is this, or this is the vacancy, or this is where rents are, or this is where, let's say, home prices are, and all those kinds of things. But really, you know, what's kind of lurking in the shadows is where we started talking. I said, I don't know if you can, but if you can come down into the office today, let's film something about what you see on the shadow supply and the shadow demand. Anything you want to add to that?
I think an important thing to remember when we look at supply and demand, which is really economics 101 for housing, is just where are we now? And it depends on how you slice it, but according to recent Freddie Mac data, we're about 2.5 million housing units undersupplied already. So it's important to know that right now, demand substantially exceeds supply for housing in the United States.
Right. And as you guys know from some of my videos, if you go to the NMHC, which is the National Multi-Housing Council, you'll see that there's a study even there that shows that we're way undersupplied for rental housing too, and that we're not building enough year over year. And now we started to, but then the pandemic hit, and now we're kind of going through another crisis. And so that obviously study will change. But the point is that we are definitely undersupplied. There wasn't enough homes being built, and there wasn't enough apartment homes being built. And that was largely due to where we came from this last recession. There was a bit of a lag there, right?
That's right. Yep, home builders couldn't keep up with demand over time.
Right. So now, that's not to say that you should go out and build stuff and buy stuff and hope that it works, because there's a lot that's going on at the state level, at the city level, even at the sub-market level. And so you do have to get educated, that's the name of your platform, on exactly where. You want to make sure that wherever people are going, that you are there, not where they're leaving from, because there's a lot of places, especially right now, where people are leaving. You want to talk a little about migration patterns, because that affects this right here.
We sure will, and you're so good at bringing that context. Of course, it's convenient to talk in national numbers and not every geographic area. You're an expert at parsing those by geographic market. We can also think of markets as different asset type and so on. But what's going to happen in the future? We know we're undersupplied now, but people want to know. Ken and I see areas where there is both future supply coming out of the market, which we call shadow supply, and future demand coming out of the market, which we call shadow demand. So with the shadow supply, I think first a lot of people think about what's going to happen when the foreclosure moratoriums end. They will eventually. So a foreclosure moratorium just means a bank cannot foreclose on a borrower that becomes delinquent on their payments. It doesn't mean that the borrower doesn't have to make those payments. It means that those payments are deferred, but there is an expectation that some are eventually going to default, and that is going to bring some of this shadow supply onto the market. That concerns some people. If there's more supply than demand, then prices need to go down.
Right, so let's go there. Let's talk about shadow supply first, because I think that's a really good topic. So what we're going to do is we're going to talk about shadow supply, And so what we definitely know, the first thing that we're going to have is we're going to have, let's call it this forbearance, right?
Mortgage forbearance, where if a borrower can't make their payments, they can defer those until later.
Right. So right now we know that there's about 2.5 million people that are seriously delinquent on their mortgages. And so the question is, what's going to happen to those people? There's actually more people delinquent, but there's 2.5 million seriously delinquent.
Yeah, that's what we don't know. That's the big unknown. Oftentimes in those arrangements, however, if one's in forbearance, they can just tack those mortgage payments onto the end of their 30-year loan. And if one is in that scenario, they ought to be able to get back on their feet pretty soon. So we don't know how many people are going to end up in trouble, but it will create some amount of shadow supply.
There's a couple things that you need to consider here. The first one is the government's already kicked us down the road twice. So first it was 6 months, then it was another 6 months. And we don't know yet if they're going to kick it down the road again. So hopefully there's something, but we obviously do not want these people to lose their homes. But there's a lot of people that are delinquent on their mortgages right now, right?
That's right. And politics plays into this as well. We're going into where we would expect to have a new presidential administration, and a lot of people think that that administration is going to be more supportive of helping out people that need a hand and putting more money into the economy or giving them more options for forbearance where they don't have to make those mortgage payments over the longer term.
Right, so the thing that you need to look for are where are these heading and where are the defaults, and by state. So you can actually go onto services like www.black-knight, and they're a mortgage data. They collect mortgage data, and you can actually drill down into the state, into the city, and that's where it becomes really interesting because these forbearance numbers are like super high in some cities and super low in other cities in the same state. So you just kind of need to know where all that's happening. The other piece around forbearance is the government has control over government mortgages. Fannie Mae, Freddie Mac. There's a lot of mortgages that are private. And so, you know, if I owe money to Keith, for example, and I can't pay, it's going to be a very different scenario than if it's, let's say, a government mortgage, right?
That's a great point. That's right.
Yeah. So the second thing that is going to definitely impact supply is going to be these migration patterns. Now, we talk a little bit about these. Migration patterns are just people moving. So I was talking to Keith. I go, why are you down here? He's like, well, I'm considering leaving where he lives, right?
Potentially.
Yeah,
that's a long story.
But yeah, but there's other people that are leaving the area that you're from. And then the same thing, I grew up in Seattle. People are leaving there. I owned a place in Portland. People are leaving there. So I got friends that live in New York. People are leaving there. The question is, where are they going, right?
That's right. People continue to leave high-cost, high-tax states and migrate to these low-tax, low-cost places. And oftentimes, the pandemic has exacerbated that trend because the coasts that tend to have high-cost, high-tax jurisdictions also tend to be densely populated. Those areas in the Midwest and South aren't. People want more space in the pandemic.
So you'll love this. So just this week, North American Van Lines and U-Haul just produced their results for 2020. So I've been looking for these. And so basically, I mean, imagine if you live in Seattle and you're figuring out where you want to go and you want to go to Phoenix, you're getting a U-Haul and you're renting it from Phoenix to Seattle or Seattle to Phoenix and you're dropping it off. And you're moving all your stuff and you're dropping it off at that U-Haul center. Now that's a data point, just like North American Van Lines or whatever company that you use. It could be Atlas Van Lines, North American Van Lines, it could be Ryder Trucks, but those are data points and those are actually starting to come out now. And so what we're starting to see is what's the difference between people moving in and people moving out, right? And that's what we're trying to figure out here. And this is going to affect supply, both negatively and positively.
That's right. And that migration data is really valuable. That's where you can see for example, a migration trend from Yonkers, New York to Orlando, Florida. It costs so much less to rent that truck and take it from Orlando back to Yonkers because so few people are making that move, and there's a lot more demand to make that move from, say, Yonkers, a populated place, to a low-cost place in the sun like Orlando.
Right. Another very, very, very good point. Other kinds of migration patterns that you might see show up, the post office. So I know that there's data on the U.S. Post Office. You just go take a look, because when let's say Keith moves to Phoenix. Well, him and his wife, they're going to exchange their driver's licenses. They're going to exchange their addresses. All that stuff is data, and so that all gets recorded. And so those are really, really good indicators to also see where people are going to go, either permanently or temporarily, because if they're temporarily here, they're probably not going to do all of those things. So they might be going here for 6 months or a year, but if they're not going to cash in on their address, then they're probably going to, go back there eventually, perhaps, right?
Real estate is such a local phenomenon. And it's interesting, you can make the case that geography has never been less important in human history than it is right now, but it's still really important in real estate, and that's not going to change anytime soon.
Right, right. So what we're trying to show you here is that as you're making your buying decisions and you're trying to decide, if something is going to trend up or something is going to trend down, this supply and these migration patterns are going to affect that dramatically. So, and let's just talk about one more thing. Let's talk about listings right now. So, if you guys Google right now, you're going to see that from the beginning of 2020 to the beginning of 2021, you're going to see that listings are down nationally by about 40%. Now this is a big deal, because what we're seeing is that people are moving with these migration patterns. For example, let's say they're moving from Portland to Eugene, Oregon, which is not very far. Well, if Eugene, Oregon typically has 500 homes on the MLS, right now it maybe has 100 or 200, because people are concerned about people walking through their homes due to COVID, or maybe they're concerned about their employment. And so their listings are way down historically, way down from prior years. And so what that is that's a supply issue. There's a lot less supply with a lot more demand, and that's what's driving the prices up right now.
That's right. And when you're out there bathed in this media bath about real estate articles, I think there's something important to remember when it comes to supply and listings in sales data. In the example you gave, if listings in a market fall from 500 listings over a certain period of time down to 200 listings, a decrease of 60%, and that translates to 60% fewer sales. In the media article that you're reading, the headline might be "Sales drop 60% in Eugene, Oregon," and you think, oh, well, the market is just terrible. It's going to heck in Eugene. What's going on? No, that just means there's less inventory on the market reflected in the listings, resulting in the lower sales because there wasn't enough inventory or listings. That's what that means.
Right. The other thing that they're doing is, because there's low listings and there's high demand, then they're saying, well, homes in Eugene have gone up 15 or 20%. And so they're saying what a great market it is right now. And it's also just another window in time. So both are correct, but it just depends on what they report on.
That's right.
Right?
Yep.
So be very cautious about these listings. If you guys take a look at places like New York City or Chicago, you're going to see that these are up and prices are way down. But you're also going to see that a lot of people aren't moving out of state. What we're starting to see from these migration patterns is that some people are just moving 20, 30 miles away, and they're in homes that are significantly less than they would be maybe down in that urban core where they're paying really high tax. So they might be moving to another city, but they might be still staying in the state of New York or even the state of Illinois, as an example, right?
That's right. Yep. Maybe looking to go from the urban area to a more rural area and getting more space in the pandemic.
Right. And so what I think is going to happen with this listings right now, it's at historical lows. All you have to do is Google what are the home listings like right now at the end of 2020, and you'll see that listings are down 40% in the nation. Now, some places are significantly higher, some places are significantly lower. So that's not a good barometer. You do need to dig down into the state and in the city and even into the sub-market. But you're going to see these little bubbles all over the place. And what I predict is going to happen is that this forbearance in 2021, as people start to figure out what exactly they have to do when all this money comes due, and they're like, okay, I've got 100,000, 200,000, 50,000 of equity in my home. Now what am I going to do? I owe this. Maybe I can tack it on the back of my loan. Maybe I can't tack it on the back of my loan. But maybe what I should do is list my house right now that the vaccine's rolled out and things have slowed down, hopefully, on this pandemic. And I think you're going to start to see a massive amount of listings that are both in trouble and people that just want to get the heck out of Dodge because of employment. So I'm thinking that in 2021 and 2022, the supply of homes and the supply of listings is going to go way up, and it's going to happen over a long period of time, which for sure will temper down the prices. It'll temper down, even go negative on prices. We're already seeing that in New York. You're already seeing that in Chicago. You're already seeing that in a lot of the major urban areas, but you're also seeing it in some urban areas. What do you think?
I think you want my wife and I to look at Scottsdale listings. That's what I think. I don't know if we're ready to do that yet, but we'll see about that.
Yeah. So these supply issues are definitely something that you guys need to look at. I was having dinner last night with some really smart folks that work at Wells Fargo, and they were saying, hey, prices are running up. It's definitely not a time to buy. And I said, the reason they're running up is because the listings in the area are shrinking down, and there's a lot of people right now moving to Phoenix. Phoenix is one of the markets, as you look at the North American Van Lines report, it's the #1 market in the country where people are moving. So no matter where you are, people are moving here. And what are they doing? They're looking for rentals. They're looking for houses. They're looking for all kinds of things. The restaurants are packed right here. The same thing's happening in Florida. So not every area in Florida. I mean, Miami's different than Orlando, and Orlando's different than Tampa. So you have to really drill down. And even inside of those, you need to drill down into the individual sub-markets, because there are good areas and bad areas. But this is all really important for you guys to watch as these migration patterns start to create bubbles and depressions in all these individual markets, right?
That's right. That's listings. So shadow supply that could potentially be coming on the market, alleviating some of this housing shortage of 2.5 million units that we have right now.
Right. And so just before we move over to shadow demand, we're going to talk just a little bit about rentals. And so obviously you have the same kind of dynamics going on when you've got about 12 million people that can't afford to pay rent. And those people are going to be moving around. That we're already seeing some of the young kids that can't afford, that maybe they're on unemployment or they're moving in with their parents, right? It's one of the biggest statistics we're seeing.
That's some of the shadow demand that we'll talk about next.
Yeah, so we're going to move to that next. So let's talk about shadow demand.
So shadow demand here, really the opposite of shadow supply. Demand could be coming potentially from other areas, especially when one looks at demographics. And a lot of economists say that your demography is your destiny. So where are the people coming from? If you're going to supply them with housing, you need to have demand for that housing. And one thing that the pandemic has induced that a lot of people aren't thinking about is that data from the Pew Research Center shows that right now, more than half of those age 18 to 29 live with at least one parent. In fact, 52%.
Yeah, 18 to, was it 29 years old?
It's 52%, yes, of 18 to 29-year-olds live with at least one parent. If that sounds high, it is. That's higher than at any point during the Great Depression and even before the Great Depression. So how does that translate to potential shadow demand for the future? Well, when the economy gets going again and these people get jobs again, that is the potential for more household formation. Now, if you think about why this might have happened, it makes a lot of sense, because if you think about the disproportionate numbers of layoffs that we had in the economy with the pandemic, they were disproportionately skewed to service workers and restaurant workers, and oftentimes that's squarely people in that age category that have those things. So people don't want to live with their parents for 5 years until they're age 34, playing video games and Fortnite with their parents. That just doesn't really mix. That doesn't work. So when the jobs come back, this is material for that shadow demand that can be released into the market as households begin to form again.
Right. And so we did see this in 2008. I remember this, Keith. There were a number of kids that were trying to come out of college in 2008, 2009, 2010,
Right.
2011. Okay, just like, and the system is set up supposedly where they move out of college, they move out of your parents' house, and then they get a job and they rent and then they buy. I mean, that's kind of the natural transition.
You sound like a college administrator. Is that how it always works?
But it didn't work out, right, for so many people. I remember in 8, 9, 10, 11, going and there's some super smart kids that were working at retail and service jobs and with these big degrees and big student loans. So we've already seen this happen, and a lot of those folks did come out of it, but now we have a whole new wave with this new pandemic. Both my kids, as many of you guys know, I have 2 kids at University of Arizona, and they're facing this exact issue right now. We're sitting on at least another 10 million people unemployed from when we started. And now you have all these kids coming out of university, or maybe even not going back to university because they're learning on Zoom. And they're trying to find jobs in this high unemployment market. And also everything's closed. So it's a bit of a mess. And so what they're doing is they don't have the financial resources. They don't have the savings. They're moving in with their parents. This is a massive number of people, guys. When the economy starts to correct, he's right. Keith, we're going to start to see these people they do not want to live with their parents. Their parents do not, in most cases, want their kids to get out of the house and make their own way. But it just isn't the case right now.
So this right here is your future rental pool, whether you have apartment buildings or single family homes or whatever it is. The older of that cohort are millennials. Millennials is the largest generation in American history, and many of them are of renter age and first-time homebuyer age. So this is really a positive demographic trend for real estate investors.
Yeah, and if you look at all the different kinds of reports that are coming out, especially on the home builders, this is what they're looking at right here.
Yeah.
Everybody's looking at this group right here as the next wave of renters and the next wave of home buyers, because obviously, especially at this age group, people want to buy homes. They want to get a mortgage, get a home. And the other problem we are having is we are having a bit of an affordability issue. With some, these prices are going up, rents have gone up, as you guys have seen in the past. So this is going to be a very interesting thing to watch in the future.
There is another shadow demand component, and that is one that you might overlook because it just seems obvious. It just seems like background noise because it's always been there your entire life, and that is the fact that the United States has population growth.
Yep.
And maybe you're thinking, well, of course, America has population growth. We always do. Maybe you know that the field that you used to catch bullfrogs in is now all paved over with the subdivision or something like that. But that's something that a lot of places can't take for granted. Western Europe is having a substantial population decline. Russia no longer is growing in population. Japan has a population decline. So you just can't count on that. But here in the United States, you can. There are about 330 million Americans. And year over year, we continue to have a population growth rate of about 0.6% per year. This is where the demand's coming from. So that translates to almost 2 million new residents every year. They all need to live somewhere. Every single one of these nearly 2 million every year. Population growth is part of your shadow demand. You can't say that everywhere in the world.
Right. And so one of the great charts that you guys can go look at online is live births. So you can actually look at when somebody was born and kind of project out when they're 16, 17, 18, 20, 30 years old And as you guys have, and as we have, there are things that you do in those age groups that are, kind of progression based on, education, based on jobs and employment, and based on migration patterns and things like that. So as you this is a big, big number, guys. This is every single year. These people are going to move, and they're going to move somewhere, and they're either going to buy, they're going to rent, they're going to want jobs, all those kinds of things.
And of course, that's distributed variably across the nation, like we touched on before, but that is a general trend of growth. All those people need to live somewhere.
Right. Now, what else you got?
Well, another thing that a lot of people aren't thinking about in the upcoming political climate, I touched on it before, is with immigration. Some people tend to think that with new policies, with the new presidential administration, that's going to be more conducive to allowing more immigrants come into the country. And this is not any political discourse. It doesn't really have anything to do with what you personally think about immigration, whether you're a proponent of that or a detractor to that. If more of it's going to happen, it's more about your responsibility as a real estate investor, positioning yourself how you can in the market to serve these immigrants. So maybe you're thinking about a certain asset type that they desire. Maybe that's a certain geography, whether that's along the border of Mexico or somewhere else, in helping to serve those people. It's just another place where more demand can potentially come from for the next 4 or more years.
And this is hundreds of thousands of people a year, too. So you guys need to understand this is a thing, and it's been a thing for the years. And as Keith said, different administrations have handled this differently. We're not going to get into politics here. The point is, this is a thing. These are real people coming into the country, real people creating additional demand on things like rentals and housing and restaurants and services and all those kinds of things that right? And I have good friends of mine that have created huge companies just around this issue alone. And it's a real thing. If you really dial your head, you can see that, and this is just another migration of people coming into the country, and they're gonna move around based on where the jobs are, based on where maybe low entry housing is, just like these kids here. And all that stuff is going to be a demographic that you need to watch.
It's more demand for housing. It's also more demand for potential employment in helping to spur the economy as well. So again, it's not whether you're philosophically opposed to or in support of immigration. It's about serving those people with good housing and doing good work and serving them with housing that's clean, safe, affordable, and functional. You can do that. This is where shadow demand for housing could be coming from.
Right. So these are just some of the things that you guys need to be watching. Now, keep in mind, as these migration patterns, that includes all of this. As a lot of these people might continue to move in with their parents based on what happens in 2021, or they might be trying to move out based on job growth or whatever it might be. But keep your eye on this demographic. Keep your eye on the population growth, where they're heading, and keep your eye on immigration. And hopefully, you guys will be making better decisions on your investing, and you'll be ahead of that, because you don't want to be a pioneer. You want to go to where people are going, not necessarily where they're moving out of.
Yep. So that's part of the demographic picture. A lot of people focus on where we're going. Everyone naturally wants to know next, and they want Ken and I to have a crystal ball. Remember where we are. We're already undersupplied by 2.5 million housing units like we discussed. You can also parse that in a way of nationally we have about 3 months of housing supply, depending on where you look. As we know, 5 to 6 months of housing supply is what we consider a balanced market. So demand has to continue to exceed supply for at least some period of time here.
Right. So keep watching this moving forward, guys. This is going to change monthly. Jump on those reports. Take a look at some of those migration patterns. Take a look at this population growth, immigration growth. If you really drill down, you can actually see where some of these people are moving. You can even see it here, where they're moving in with their parents, because these are real stats, real data that's available on the internet that you guys can take a look at, and those are contraction moments, right?
That's right. Yep. So these are really important things to be attentive to long term. The demographics actually set up pretty well for real estate investors over the longer term if you buy right. You still have to buy right. You can't get over enthusiastic just because mortgage interest rates are low. That's not enough reason to buy a property where the numbers don't work and it doesn't cash flow on day one. You still need to be attentive to that.
Right. So as you guys are moving forward, just make sure that you're considering both the supply and the demand as you start to invest your money or investors' money into a particular market or sub-market. And don't go off of the national data. Don't go off of the state data. Make sure that you know, because real estate is a local business, right? I see a lot of people fall into this all the time where they're saying, well, rent growth is 6%. Well, it might be nationally, but not in Detroit, or obviously not in New York and not in Chicago. So there's areas that are moving negatively and there's areas that are moving positively, some temporarily and some permanently. And so your job as a real estate investor and to be able to raise money is to be able to educate yourself here, and then you're going to be able to raise capital and you'll be out in front of that and you'll do very, very well long term.
And we've talked about supply and demand. Of course, that's an important dynamic. That's economics 101, but it's easy to overlook that there is a capacity to pay component of this, because if wages and salaries aren't there, you can demand housing all day, but if you don't have the capacity to pay for that housing, that won't help you out and you can't get there. If you are crawling in the desert, dying of thirst, and there's someone there with a water stand that will sell you a water for just a dime to save your life and keep you from dying of thirst, but you don't have a dime to pay it, you're going to die of thirst. So you do need a capacity to pay for housing, whether that's as a renter or in your own primary residence. So it's capacity to pay coupled with supply and demand.
That's right. And that's actually what we're seeing right here with this young group here. They don't have the capacity to pay, so they're moving in with their parents.
Great point. Yep.
So guys, thank you for listening. Keith, thanks for coming all the way down from Alaska and sharing your knowledge. And keep listening. And if you guys want to look at the bottom of the screen here, we're going to put Keith's information. You can go check out his stuff at Get Rich Education. You're going to learn a lot more. He's a great educator and a great friend, and it's always great to see you.
Okay, and I get fired up talking about this stuff. Thanks so much for having me here.